You know that feeling of being stuck with high-interest credit card debt? It's like you're playing a game you just can't seem to win. But what if I told you there's a way to flip the script? Today, we're diving into the playbook for a really powerful financial move, the balance transfer. This is your guide to turning the tables and finally beating that debt.
First things first, let's get real about what we're up against. This quote from the Epoch Times just lays it out so clearly. Think about that, $1,500 a year. That's not money going towards the stuff you bought. No, that's just feeding the interest beast. That's cash that should be in your pocket, or better yet, knocking down your balance. This is exactly why learning to play this game is so important.
All right, so let's jump into section 1. The first step in any game is to know your opponent, right? High-interest debt is a pretty common enemy, but it's the way it works that makes it so incredibly tough to beat.
And this number right here, this is the monster you're fighting, 24.21%. According to the Motley Fool, that's the average interest rate on credit cards right now. When the rate is that high, you're basically stuck on a financial treadmill. You're running, you're making those payments every single month, but you're not really going anywhere. You just can't seem to make a dent.
And that leads us straight into what's called the interest trap. It's so frustrating, right? It's this vicious cycle where most of your payment gets completely gobbled up by interest charges. Just little bits and pieces are left to chip away at the actual debt. It's a system that feels like it's designed to keep you paying and paying and paying.
Okay, so how do we get off this treadmill? How do we break the cycle? Well, that brings us to our next section, and this is where we introduce the secret weapon, the balance transfer. I want you to think of this as your power-up, the one move that can totally change the game.
So, what is a balance transfer card exactly? Well, it's a special type of credit card that gives you this amazing promotional period with 0% interest. You take your expensive debt from that high-interest card and move it over to this new one. And then, for anywhere from 12 to 21 months, that debt just stops growing. It's basically a timeout. You get to call a ceasefire in this war against interest.
The strategy itself is actually pretty simple. It's a 3-step play. First, you find the right card for you. Second, you make the transfer. And third, and listen, this is the most important part, you go hard after that principal balance. You attack it with everything you've got while that 0% interest clock is paused.
And why does this work so well? I mean, it's not magic, it's just math. When you're not fighting against interest, every single dollar you pay goes straight to shrinking your debt. And that means you pay it off way, way faster. On a $5,000 balance, that could easily save you over $1,000 in a year. Plus, as a bonus, you get one simple payment, and believe it or not, it can actually boost your credit score over time.
But, and this is a big but, like any good game, there are rules. And there are definitely traps. If you ignore them, this whole strategy can blow up in your face. So let's talk about what you absolutely have to look out for.
Okay, first up, your credit score. This is a big one for a lot of people. According to Experian, you're looking at a bit of a short-term trade-off. When you apply for a new card, yeah, you get a hard inquiry on your report, and it lowers the average age of your accounts. That might cause a small, temporary dip, but the long-term win is huge. You lower your credit utilization, which is one of the biggest factors in your score.
And just look at this chart to see what I'm talking about. This is a perfect example from Experian. By moving that balance, you instantly increased your total available credit. And look what happens. Your utilization rate can seriously plummet, going from a risky 63% all the way down to a much healthier 28%. That's a massive improvement, and it's exactly what lenders love to see.
Now, you might be asking, what's the catch? Well, there is a cost to play the game. Almost every single balance transfer has a fee. It's usually somewhere between 3 and 5% of the amount you're moving. You got to do the math, of course, but for most people, paying that small one-time fee is so much better than paying crushing interest month after month.
And you have to understand how this works. The fee isn't something you pay separately. Nope, it gets tacked right onto your new balance. So if you transfer $5,000 and there's a 3% fee, your new debt on that card starts at $5,150. You have to build that into your payoff plan from the very beginning.
All right, I need you to lean in for this one. This is, without a doubt, the single most dangerous trap in this entire game. You have to know the difference between a real 0% APR offer and something sneaky called deferred interest. With a true 0% APR, if you still have a balance when the promo ends, interest just starts building on whatever is left. No big deal. But with deferred interest, if you have even 1 penny left unpaid, they can slam you with all the interest you would have paid from day one on the whole original amount. It's a brutal penalty that can wipe out all of your savings. Avoid it at all costs.
Okay, so you know the goal, you know the power-ups, and now you know the traps. It's time to get into the winning strategy. This is your step-by-step playbook to make sure you come out on top.
But hold on. Before we get into the X's and O's, we have to ask a really important question. Is this the right play for you? Because this strategy, it isn't for everybody. It takes a certain kind of mindset and honestly some real financial discipline to pull it off.
So what does a winning player look like in this game? Well, first off, you'll probably need a pretty good credit score. We're talking 670 or higher just to get approved for the best cards. But even more than that, you have to be disciplined. You've got to be totally committed to making those payments week in and week out. And your goal has to be getting debt-free, not just shuffling debt around.
Now let's talk about the 4 non-negotiable rules for winning. Rule number 1, do the math. Figure out exactly what you need to pay each month to clear that balance before the 0% offer ends. Rule number 2, put it on autopilot. Set up automatic payments. Just one late payment can get that 0% rate taken away. Rule number 3, this card has only one job: to be paid off. Do not, and I mean do not, make any new purchases on it. And finally, rule number 4, don't close your old credit cards. Keeping them open with a 0 balance actually helps your credit score.
And that brings us to the final huddle. We've talked about the opponent, the power-up, the rules, and the winning playbook. Now, it's really time for you to decide if this is the right tool for your specific situation.
This table breaks it down pretty nicely. Look, if you have good credit and a rock-solid plan to kill that debt while the interest is at 0, this is an amazing strategy. It's a game changer. But, and be honest with yourself here, if you tend to struggle with spending or you can't really commit to those aggressive payments, a balance transfer might just be putting a Band-Aid on a bigger issue.
You know, when you boil it all down, it really comes back to this one question. Winning this game isn't just about finding a card with a great offer. It's about having the 2 key ingredients: the credit to get in the game and, more importantly, the discipline to see the plan through to the end.
And that really brings us to the key takeaway here. A balance transfer is not a magic wand. It won't make your debt just vanish into thin air. It's a tool, a very powerful tool. In the right hands, it can pave your way to financial freedom. But if you're careless, it can actually make things worse. So the real question is, are you ready to use it wisely?